Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 14th of October, 2023, and it's the weekly technical analysis for this spot gold and dollar yen for the third week of October. And as we take a look at spot gold, you can see that it started off the week with a gap up due to the conflict at the Gaza Strip with between Israel and Hamas. Then subsequently there was a pause at the Thursday with the UsdCpy data coming out better than expected, and there was a pullback for spot gold, but then a very strong explosive move on Friday. Likely this could be both an inflation hedge initially and then combined with a flight to safety before the weekend's further conflict at the Gaza Strip. So is the possible flight to safety here. And then for dollar yen, it already started to climb up from after a pause on Tuesday, and expectation for better expected figures for PPI and CPI drove it back up again, heading towards 150. So let's review the fundamental drivers from last week and take a quick look at the outlook for this coming week as well. But looks like it's basically US dollar strengthening. At the same time, gold is also pushing up higher. This was a massive 600 pip move on the Friday. All right. And last week, as the precursor to the CPI data, the US PPI came out already higher than expected. So that was already an alert and a warning to the markets. Higher than expectation of 0.3. And then on the Thursday itself, CPI data came out higher than expected, 0.4 versus 0.3 month to month, and 3.7 to 3.6 year over year. So that was the catalyst for the US dollar to recover after pulling back. UK data met expectations, so not much impact there. And then on Friday, the US consumer sentiment didn't have much of an impact already, because the key driver was the US CPI data, which could be a cause for concern for the markets, with the Fed pondering whether they could raise interest rate next month, one more round before the end of the year. So that's what the market is taking into consideration. This coming week, again, more US and UK news with retail sales for both sides, and UK CPI is coming out as well, and UK jobs and Australian jobs report as well. So US retail sales forecast is slightly lower than actual for the month of September, which was already a surprise. So this time the forecast is lower. And similarly for the UK as well, the surprise was also in September, and this time the forecast is also a lower figure. So we'll see what impact or how much impact those will be to the US dollar's recovery after last week's CPI data, and whether it will have any impact to slow down the recovery, or whether it's going to help to continue to boost the US dollar even further. And for the UK side, we'll see whether it's going to be a concern for pound and sterling pairs. If that's on the wrong side of the US dollar's movement. Okay, so let's move back to the analysis. So beginning with spot gold, and after gapping up at the start of the week, this was in response to the conflict in Israel and Gaza, and this possible gap up was the already probably starting to be a hedge move. And even though Thursday the UsdJpy figure came out higher than expected and potential cause for concern with the Fed possibly raising rate one more time before the end of the year. But I think the Friday's move was a hedge against the conflict, the geopolitical conflict between Israel and Hamas, and hedge the possible further tensions of incursion into the Gaza Strip, with warning from the Israeli Defense Forces. So otherwise, next week at the start of Monday, there could be an even bigger gap. So it lasted through all the interim resistance from the 38 Fib retracement through the 1875 at the 50 Fib retracement, and breaking through 1900 through 55 and 200 EMAs, and getting past 786 and heading towards the recent high, the swing high here, towards the 1950 area. So this is clearly a response to the geopolitical conflict. And if we extend this resistance zone further out, we'll see that was from the previous swing low. It's coming up to that area again. So that's an interim resistance, and a major one at 1950. And we can possibly find some support at 1900 now. Cause a significant support, probably likely lower at the 1875 at the 50 Fib. Okay, on the weekly time frame, you'll see a very strong bullish engulfing candle here, breaking through the open of the previous week as well, and heading towards that interim resistance zone. So let's hope the conflict doesn't last too long, and that there'll be less casualties as a conflict ensues, and that everything will be able, or both sides will calm down. But this is going to be a concern for both the US dollar and the precious metal hedge here. Right, let's take a look at the US dollar index as well. And here's the US dollar index, the DXY, and looks like it does look like an inverse relationship with the euro after pulling back for the past 6 days, finding support. On Thursday's US CPI data, there was a strong bounce and recovery there. So it did not pull back all the way to the 105, managed to recover. So now, similar to the euro, this is possibly facing the head and shoulders pattern in this case. And it's critical that it breaks through this left shoulder's resistance and climb up to either test the 107 or even the 200 pip extension at the 107.25. Otherwise, it could also consolidate in this larger range until either could be also forming a double top, similar to a euro double bottom. Let's take a look on the weekly time frame. And that's the bounce of the support, and did not quite get to 105, but a strong bounce from there. There's a possible bullish momentum to continue next week. And yes, it could face resistance at the previous week's high, just near the 107. So it all depends on this week's price action and whether retail sales will be a key driver. For the US dollar. And for now, the interim support, we can move that to the 105. Strong support below that now at the rising 55 EMA. And key resistance at 107 and perhaps even up to the 200 pip extension. Okay, let's move back to the other pairs. Let's move on to dollar against Japanese yen. There wasn't much of a pullback and retracement, and managed to find support already on the Tuesday and climbing back up on the Wednesday's PPI data, and then on Thursday as well with CPI. And then pause on the Friday just below the 162 extension and still below the 150. So we're not sure whether this is going to continue to break through above the 150 and hit higher, or whether it's going to pause with a test of the recent highs and eventually retrace with a double top. So that's a critical area of resistance there. On the weekly time frame, it's forming a harami with this consolidation, smaller range for last week. So it's once it breaks out, that's going to be a major move higher. And going back to the daily here, This is now serving as a key support zone. For now, it's an interim support. We've move this significant support zone just below that at the 147, along with the rising 55 EMA. Critical resistance right up here already. Okay, critical week for the US dollar as well as spot gold for the hedging move. It's not so much hedging. It's a flight to safety for spot gold. All right, let's do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.